Thanks so much for tuning into BQ Conversations. I'm your host, Neeraj Shah. VST tillers and tractors came into focus, at least my eyes, sometime last quarter, wherein after the quarter three numbers, they came out with a guidance which was very impressive for the next 2 or 3 years at the very least. The fact that auto as a space is believed to be a pocket which might actually have better margins for calendar year 2023 on the base of what most of the companies faced in 2022 only adds to the glitz of almost any company in the auto space which can forecast a strong sales growth, and which is why we thought it's best to get in the management of VST Tillers, the CEO of VST Tillers, Anthony Cherukara, to talk about all that's happening within the company and what could happen going ahead as well. Anthony, great having you. Thanks for joining in, and congratulations on the milestone that you guys reached 2 days back.
Thank you so much, Neeraj.
I want to start off with your assessment of what growth can be in FY24, say, or even FY23. What do you reckon you would do based on the recent comments that you've given about FY23 and FY24? And how do you foresee the next 2-3 years to be like, if it is possible to predict things in an environment which is so volatile?
Absolutely. So the last few years, as you rightly said, has been pretty volatile. First, we had the COVID, and then we had the supply disruptions, and then we had the huge runaway inflation. So it was a continuous bit of shocks for every business, and we were no exception to that. But having said that, the sector which we are in, which is agriculture and mechanization, is buoyant. And two reasons for that. One is the majority of farmers who are small and marginal due to non-availability of labor need mechanization, and they are getting into mechanization. Second aspect is the enablers, which is the water availability as well as the minimum support price of crops, which has been favorable over the last 3 years, and we have seen continuous growth for this sector. Looking at the future, what we are looking at is continuous growth, especially in the small and marginal farmer space, due to the reason I just said. We expect a growth to continue at 15 to 20%. As I have said before, that the power tiller industry is continuing to grow. We have a 65% market share in the sector. We are driving this growth. The last 3 years, we are almost at 20% growth in the power tiller business. We expect that to continue in the next 2 to 3 years at least, unless there is, of course, a drastic change in terms of water availability due to the El Nino effect or something. But we expect that to be still growing. The second aspect is the tractor business. The tractor business, of course, the industry as such has a very large base. So the industry is not expected to grow at the huge double-digit numbers or huge single-digit numbers. But we are looking at overall industry growth in the lower single digits. And VST should be able to grow faster than that. The simple reason being that we are entering into the utility tractor space, which is the larger tractors. We have always been in the compact tractor space, which is not a segment that has grown in the past.
So you are saying, okay, effectively, let me take the last point first. You are saying that don't look at my 5-year sales CAGR, which has been about 5% give or take on the tractor side, because I was in the compact tractor segment. I'm getting into utility, which will be a higher market, and therefore you have the confidence of growing at a higher rate than the industry, presumably low double digit, if you will.
Yeah, so what we need to look at growth at VST from the launch of the vision that we did in FY21. So FY21, 22, and 23, we should be able to maintain a CAGR of almost close to 20%. And
this is for tractors or overall, you're saying?
Overall business.
Okay, fine.
Yeah, tractors have been at flat or single digit. We have always been only in the compact tractor space.
Okay, so would it be fair to say that while you've not even been able to scale up the tractor business, while you have the capacity, you believe that the time ahead could be different because you are vacating the space that is, or the aspect of that business that is not working for you, and you're hopeful of making that the focus area, which is utility tractors work for you?
Yes, a couple of things on the tractor space. How we are looking at utilization. One is, of course, growing the compact tractor business globally. We have entered European markets and we are on the works to get into the other compact tractor markets as well across the globe. That is point number one. Point number two is we are suppliers to some of the EV tractors across the globe. We have started supplies. We have investment in a company in the US. We are also suppliers to them. So that supply is scaling up. We expect the utilization to improve with that. And the third aspect is getting into the utility tractor space, which is almost 800,000 of the 900,000 tractor industry in India. So the bulk of the industry, or 90% of the industry. So and we also have a collaboration with Zetor, with which we expect to scale up faster in that space.
What would the right to win be, Anthony? There are established players in the bucket that you're trying to enter. There are newer geographies, so therefore you don't have necessarily very vast experience. So what's your right to win?
The VST and the Zetor brand is known for trust, and Zetor especially is known for higher horsepower tractors. And we intend to deliver these to these markets, which has been preferring higher horsepower haulage tractors. And premium tractors is what we are looking at. And I don't want to get into the features and benefits right now because we have not yet launched the product, but we clearly have differentiators in that space.
Okay. So, let me ask this. So let's assume that your confidence pays off, that you'll be able to give to the market what they presumably want, and at that point of time you'll be able to make inroads into all these buckets that you're doing. Would this come at a cost of operational metrics or return ratios, because you're trying to in a sense finding your feet, if you will, and making dents into players who are already there?
Of course, this journey is not going to be easy because the competitors are already there and very strong players are already there. However, what we are looking at is in terms of a margin-based play. So we are very clear that we are not in this game for numbers and market share alone, but it will be a profitable business from day one. We are focused on creating unique customer experience and building a great service for the customers who would experience this brand from us. That is exactly what we have done in the compact tractor space also. With the entry of many multinational players, we have still been able to maintain or kind of sustain our compact tractor business over these years. We expect to do that in the higher utility tractor space as well.
Okay, well, sincerely wish you all the best for that. Now, the other aspect, Anthony, which is power tillers, and please correct me if my numbers are wrong, of course, but I just wanted to understand this. Currently, the power tiller industry is about 60,000 units and probably expected to grow to, maybe as per what you said in one of the calls, to about 1 lakh units by 2025. Now, if I were to just do a simple CAGR of that, that is a significantly higher 35% number. Why would tiller industry grow by over 35%? That's a very large number over 3 years.
Yes, I will specifically answer that. Before doing that, I would like to mention a kind of an analogy. Looking at Bangladesh, which is probably the size of one of our states.
Yes.
The power tiller industry in that country is almost 70,000, which is bigger than us. And there is no reason why even the same profile of farmers, which is a small and marginal farmer, 80% of our farmers are small and marginal farmers. There is no reason why the industry should not be growing for power tillers in India. And that is what we are seeing in the last 3 years. However, having said that, there is a need for innovation. There is a need for creating retail finance. There is a need for creating capital approval. And that is the reason why I am saying that the industry will grow. We are driving this industry for growth, and we are working on all these enablers for the industry to
grow. Okay. So therefore, your power tiller volumes, and considering, I'm presuming that you maintained your market share or maybe improved it slightly, though your numbers it might become difficult to improve it so consistently. But I'm still working with that assumption that your calendar year 20 numbers, 24,500 odd, calendar year 22, 34,500 odd. So it hasn't grown at that pace. Would you attribute it to the disruptions that you cited at the start of this interview? And therefore, do you believe that that will change? Because I'm sure the number of 70,000 for Bangladesh, even if it was not 70,000 3 years back, would have still been high. And the comparison of India and Bangladesh would still have held true. Despite that, it's not that the numbers have grown so fast in the last 3 years.
Yeah, I'll just correct the numbers there a bit. In FY20, the number was 19,000.
I was using calendar year 20, sorry.
Yeah, okay. So FY22, I mean financial year, I'm mentioning the financial
year. Okay.
Financial year 22, the number was about 32,000. We are expecting a 20% growth. I can't come out with numbers right now, but we are expecting a 20% growth for power tillers. So we expect the industry to grow. We are at about 60% market share of the industry, 60 to 65% market share of the industry. And as I said, we are driving this growth. And with this growth happening, we expect also more participants to come into this industry. Once the industry grows, I expect that to happen. So that is why I said in the near term, that in the next 2 years, I am seeing 100,000, but I would expect much more in the next 5 years to 10 years time.
Wow. And would you believe that you would maintain the market share and therefore you would grow at the pace at which the industry is growing?
Absolutely. We will continue to innovate. We will continue to give solutions. And we have realized that that is the way to grow. We have launched almost 3 to 4 products in the last couple of years, and that is giving us good results and good response. You can expect more innovative products coming from the VST stable in the near future, and that should enable us to continue to grow and maintain our market share.
In which case, assuming that my numbers, let's leave my numbers out. I don't exactly remember your numbers, but if let's assume you've grown 20% CAGR in FY 2021, 22 or 21, 22, 23, you would expect that you would move up or up the ante from 20% to nearly 35% over the course of the next 3 years.
That is what we are targeting. We are looking at upward growth of 30%.
Wow. Okay. Now, one more question on the mix, and what I asked you for the world is probably true for my question on India, the geographical mix, and you targeting the northern market. Again, my question: what is your right to win, considering that there are large players already present in the northern states where you are trying to make a foray, so to say?
So, are you speaking specifically about the tractor industry?
Yes.
Yeah, so in the tractor industry, as I said, it is all about trust, creating customer experience, and ensuring that they get the right solution. The brand offers trust, both VST as well as Zitor. And Zitor is also known for powerful utility tractors. They were already present in the country with HMT, and there is a brand value and there is a brand perception which we would like to take mileage of. I can't, like I said before, I can't get into the details of the features and benefits, but that will be there to see in a few months.
No, so what I mean to say is what holds true for you for making a headway into the global areas that you're targeting. You're banking upon the same metrics for you to be able to make a headway into India as well, the northern markets as well.
Absolutely. Okay. And it will be functional, it will be function specific and usage specific.
Okay, fair call. Now I come to margins, Anthony, and historically the margins are much higher. You currently, if I'm not wrong, guiding to 11 to 13% for 23 and 24. Is there a possibility of a upward surprise to this if indeed the input costs decelerate faster than what might appear right now?
See, the earlier guidance that we had given was 12 to 14%, and we have adhered to it. And what I have looked at in the future is 11 to 13%. The simple reason is that we are investing for growth. We are getting into all the global markets where we have not been present, and that needs investment, that needs revenue expenditure that will happen. So we are looking at 11 to 13% guidance. Yeah, is there an upside if there is cooling down of commodity inflation? We have looked at some cooling of commodity inflation in our planning, but if there is further upside to it, definitely there will be an upside to the margins as well.
Okay, but you would take that margins, or you would rather reinvest that into ensuring that
if
you
there
reach
is
the
an
growth
opportunity
numbers?
for reinvesting for growth, that would be my first preference.
Okay, great. Thanks for that clarity. Now, during the third quarter con call, you had mentioned that you aim to achieve a top line of 1,000 crores. Am I getting this number correct?
Yes.
Okay.
Yes.
So based on what you've done for 9 months, etc., how much on track are you for that? Because that's both QOQ and YOY, northwards of 45% growth. You reckon you are on track for that?
We are very much on track.
Okay, which is great to know. Is there a guidance that you have given out for the next 2-3 years, Anthony?
See, we have set a vision for 2025.
Mhm.
But as I said, as the vision was announced, we first hit with COVID, then we had the disruptions, then we had the runaway inflation. So we have had some delays in the revenue projects that we planned and started executing. So that definitely has affected the timelines. So we are looking at getting to 3,000 crore by 2026. So there is a delay of about a year's time.
2026. So which means FY27 or FY26?
FY26.
FY26.
Absolutely.
But so okay, and I really wish you all the best, but I'm just trying to understand. If you do 1,000 crores FY23, you're talking about 3,000 crores FY26.
FY20 we were 540 crores. We have grown. We should be able to close at the number that you just mentioned.
Right.
And going forward, we are looking at achieving our vision by 2026. I had said that we will do it by FY25, but there is a delay, and we will be looking at doing that by FY26.
No, the delay is understandable because there is a lot of volatility in a lot of things. So, I can't even imagine managing the business per se, but I'm still just trying to understand, and I'm not doubting you. I'm just trying to get my math straight that if you move from 1,000 crores to 3,000 crores in 3 years' time, that's a significant bump up in a CAGR run rate that you have to clock in compared to what you've done in the past.
We're looking at a CAGR of about 40%.
Yeah, and okay, and that's
why I said segment-wise we're looking at 30% upwards.
Got it. Okay, well, great. My final question, Anthony, and that is on I'm missing out on which call it would have been, but you probably have a parcel of real estate that you intend to monetize, or you've shown about the intention to monetize. Is that happening anytime soon? Do you need to do it in order to fund any of the plans that you have?
We don't need that funds to look at our plans because we have enough reserves, as you would know from our balance sheet. However, we would like to monetize that parcel of land. We have taken actions to do that. We have shifted our factory and our manufacturing entirely out to Hosur and Malur and Mysore. So we don't have any manufacturing operations going out there in the Bangalore parcel of land that we have. So, but we have not taken any finite decision yet, and there is nothing to say at this point in time.
So nowhere very close to doing it. You may be close also, but not very close to doing anything that might get announced in the next couple of
Nothing
months.
in the offing at this point.
Got it. Well, these are significant growth targets that you set for yourself, and I really wish you all the best for being able to execute all of that, and maybe getting even more. As you mentioned in one of your answers, that over the next 5-10 years, you expect the growth rates to be even higher. So wish you all the best for that and more. And thank you for talking to us today.
Thank you, Neeraj.
And looking forward to, of course, talking to you post your quarterly numbers.
Thank you.
All right, viewers, thanks for tuning into this conversation.